The U.S. jobs report has come and gone. The unemployment rate ticked up. The jobs gains were somewhat modest compared to the estimate, but not that far off. We did see the euro versus U.S. dollar move higher and then back to the downside. The same goes true for the pound versus U.S. dollar. The dollar versus yen has seen a little bit of a decline and then a rebound, and the dollar versus Swiss moved higher than lower. I'll go through those technicals for those currency pairs in this video, so let's get started. Let's look at the euro versus US dollar, and you can see that we did see a spike above the high price from earlier today. Now seeing a rotation back to the downside, trading below the high, and looking like the break to the upside was a failed break. I'll go to the 4-hour chart to show you the importance of this area right through here. If you go to the 4-hour chart and go back in time to this area through here, you can see the number of different swing lows and swing highs coming in play as a level of either support or resistance. It was resistance through here, and then traded above and below, tried to use it level as a support before breaking to the downside right through here. So we moved back to that level and trading here today before the U.S. jobs report, and then moved above that level, opening the door for further upside, but potential for this area right through here, but then rotated back to the downside. So it seems like a failed break to the upside here for the euro versus US dollar. Will be focused on the 61.8% retracement level. They move down from the September high to the January low. That level comes in at 1.08174 on the downside. If we break below that level, then we'll look toward this swing area right through here. Let's take a look at the dollar versus yen next, and if we focus on the 4-hour chart. First, we did fall below this swing area through here earlier today. That swing area was a ceiling through here, then became a floor right here before moving to the upside. We didn't return to that level until trading yesterday, where the price came down to the high of that level, and trading here today, we did break below that level, as you can see, but the price is trying to, well, is still near that level at 147.26. That puts us within this area right through here. So if we move above the 147.338, that would give the buyers a little bit more hope that the low is in place. Just in the short term, there'd be work to do, folks, but it would be an indication of potentially a rotation back to the upside. If we move below the 147.21 level, then the 61.8% retracement comes in play at 146.94. Move below that level, it's more bearish for the dollar versus yen. Let's take a look at the sterling versus US dollar. On the 4-hour chart, we moved above the 61.8% retracement after yesterday testing that level and finding willing sellers against it. Moving above it should have been more bullish, and but the momentum could not be sustained. The price rotated back to the downside. Taking a look at the hourly chart for that currency pair. This is the price action earlier today. This is price action after the U.S. jobs report above the level. Both of those breaks above those 61.8% retracements seem to have failed. We'll watch this level as close to resistance now at 1.29236. There is work to do on the downside, however, but the main thing is stay below that 1.29236, and the sellers can have a say in the bias in the short term only. Like I said, that we need work to do, including getting below the 128.42 to 30 level on the downside, and then the 100-hour moving average way down here. Those levels would still need to be broken to say the sellers are making more headway, and of course there's a 200-day moving average of 1.2788. Finally, let's take a look at the dollar versus Swiss franc. This currency pair moved up to test its 200-day moving average. Speaking of 200-day moving average, and that level was broken earlier today and stayed below the level right through here. If the price can stay below the 200-day moving average, bias remains more to the downside. On the downside, we are testing the 50% midpoint. If you go to the 4-hour chart and take a look at that, 50% midpoint is of the move up, going all the way back to this day right here, which is September 6th, to the high price that we saw in January. The 50% comes in at 0.8786 level, and we can see we're just below that level, or trading right at that level. In fact, we're trading at 87 right now. So we're get below the 50% retracement, and then we'll look toward this swing area down there at 0.8775 level. We tried to break below that level earlier today, but failed and rotated back to the upside. So key levels all in play here for the dollar versus Swiss franc with the 200-day moving average once again, holding resistance on the spike higher after the report. So there's my technical look at 4 of the major currency pairs after the U.S. jobs report. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.